President Donald Trump promised to put America first. And so, to protect domestic steel and aluminium, his administration plans to impose hefty tariffs on imports.
We'll be signing it in, and you will have protection for the first time in a long while, and you're going to regrow your industries. That's all I'm asking. You have to regrow your industries.
The global reaction was immediate and far from positive.
Any unilateral or protectionism moves would harm the relevant countries and companies and damage the trade environment. It would have negative influence on the momentum of the world's economic recovery.
Any tariff or any quotas that would be imposed on our aluminium industry, our steel industry, would be unacceptable. We'll always stand firm to defend Canadian jobs.
The biggest concern among economists and investors is the move may trigger a global trade war. The EU says they're already in talks with other countries to mount a challenge with the World Trade Organization, but a case could take years. So the EU says it's prepared for more immediate action and is considering imposing their own import taxes.
The EU has been a close security ally of the US for decades. We will not sit idly while our industry is hit with unfair measures that put thousands of European jobs at risk. The EU will react firmly and commensurately to defend our interests.
The Trump decision is made on the grounds that other countries' trade practices endanger national security by undermining domestic production. Japan isn't buying it.
We hope to have the opportunity to tell the US that steel and aluminium imports from Japan, which is an allied nation, pose absolutely no threat to its national security.
In Asia, steel and aluminium stocks tumbled. Japan's steelworks shed 3.2%. In South Korea, POSCO was down 3.5%. And in China, Baoshan Oil and Steel dropped by the same amount. The reaction in the US was understandably more positive. AK Steel Holding gained 8%, US Steel Corp was up 6%, and Steel Dynamics rose 4%. A trade dispute would impact billions of dollars in business around the world. While many countries are waiting for the details to be laid out next week, most agree a higher price for metals isn't the main concern, it's that global trade will suffer. Liz Maddock, TRT World.
We'll be getting more reaction to Trump's tariff plans from around the world, but we begin in Beijing. And as Samantha Vadas reports, Chinese authorities are already considering ways to retaliate.
Well, China has warned that global trade will be harmed if countries follow the example of the United States. The response came this afternoon, a day after what were reportedly frank and constructive talks between President Xi Jinping's top economic advisor and US officials in Washington. Now, Beijing has been sending top advisors to the United States one after the other to ward off any hefty tariffs that may hurt trade with China. Of all the steel that America imports from around the world, China makes up for just 2% of it. So experts here actually say that they don't expect China to take too much of a hit from this move by Donald Trump, which is in part to punish what he sees as unfair trade practices, particularly by China, which is behind a global glut and has driven down prices. Now, it's not clear if tariffs will actually solve the problem, but what is clear is that China in the past has said that it will retaliate. So what we could still see is China slapping a hefty tax on products made in the US. America is a major producer of soybeans and China is a big customer, so we could see commodities like that take a hit. Now, China didn't speak of any retaliation today, but what it did say is that all countries should work together in facing the difficulties of the steel industry at the moment. It also urged the United States to show restraint in using protective trade measures.
Let's get the view from Europe now. Jameel Ahmad is the global head of currency strategy and market research at online brokerage Forex Time. He joins us from Limassol in Cyprus. Jameel, great to have you back on Money Talks. Look, it's been a very strong reaction on the stock markets and the currency markets, as well as the dollar. Do you think the sell-off has been too aggressive, or do you think the fears are justified?
I don't think necessarily that the sell-off is too aggressive. What I would say is that the markets were taken by surprise, because although President Trump did promise America first and always, and that he was always going to put a protectionist agenda to his campaign, what we've actually seen overnight is quite a sharp move, and that's because nobody actually saw this news as coming yesterday. In terms of the reaction we have seen in the markets, obviously negative reaction across Asia, Europe, and the United States today. What investors are more concerned about right now is that this could be the beginning of something bigger in the future, and they're beginning to possibly price in a global trade war. Although that's not a thing that's going to be confirmed. So we're seeing a stronger Japanese yen, stronger gold, weaker shares. We're seeing a bit of a weakness and inconsistency in the US dollar. And it's a matter of now watching out to see how these things unfold, because many were taken by surprise yesterday.
Jameel, let's focus on Europe. Just recently, the EU has said that, or it looks like they're going to impose about the same amount of tariffs, about 25% on about $3.5 billion worth of products. Jean-Claude Juncker, the European Commission chief executive, has also been talking about retaliation. How damaging would a trade war be to the European economy?
In general, it wouldn't just be the European economy, it would be the global economy, I would say. Look, optimism over the global economy has not been this high since the beginning of the financial crisis, which we knew was historic. This is the strongest levels of global growth, optimism in the global economy that we've had for over a decade. So if there was retaliation and a widespread reaction which leads to further indications of a possible trade war, this is the biggest risk to the global economy right now, because it could put the economy back on the negative tracks, and it's taken a long time to recover, and some countries still have not fully recovered from the 2007 global financial crisis. So really, that could be quite a big problem.
OK, we're going to have to leave it there. Jameel Ahmad from Forex Time in Limassol, thank you very much indeed. Now, the US's next-door neighbour, Mexico, has borne the brunt of much of Trump's anti-trade rhetoric. Joining me from Mexico City now is economic analyst Jonathan Heath. Jonathan, welcome to Money Talks. What would a full-blown trade war with the US mean for the Mexican economy?
Well, I think the most important part that we have to consider right now is that Mexico is in very serious talks with the future of NAFTA with the United States. And we all know what the implications of this means. We know that consumer prices in the U.S. are probably going to go up. It'll feed into inflation. It's going to make U.S. monetary policy more difficult. That's going to have ramifications for Mexico. Mexico will probably also retaliate at a given moment. But I think the most serious part of it all is that this really throws a wrench not just in the global trading system, but specifically in NAFTA negotiations.
Jonathan, even before this latest announcement, the relations between Mexico and the US have been really tense. What have investors already priced in the full impact of a trade war with Mexico into Mexican asset prices?
I don't think that they have fully priced it in. I think that we have a lot of different scenarios, and all of them, I think, have pretty much the same probability. We can have a suspension of NAFTA, and that's it. Or we can have a NAFTA that isn't necessarily a good NAFTA. That means building up more barriers between the trade between the three countries. Or we can have a very successful NAFTA. And I think that most markets and economists here in Mexico are placing basically equal probabilities to each one of these scenarios.
So despite this latest announcement, you're actually kind of optimistic that these talks with NAFTA could actually yield something positive for Mexico?
Well, the balance is going to be very difficult. Where we do think the hardest part is going to be is specifically the automotive industry. The automotive industry is extremely integrated between the three countries, and right now it represents about 1/3 of total Mexican manufacturing. So that is the one sector that I think that we really have to monitor and be careful within these NAFTA negotiations.
Let's look at it on a global perspective for a second. What role could the World Trade Organization play in all of this? Isn't it supposed to be an arbiter of trade disputes?
Not only is it supposed to be an arbiter of trade dispute, but I mean the whole idea of having a World Trade Organization is to try to promote free trade, to try to avoid tariff wars, and yes, be an arbiter in all these types of discussions. The problem is that the process, if you take it to the World Trade Organization instances, will probably take a long time to resolve. And meantime, maybe 2 or 3 or more years could go by before there is a positive answer here.
Economic analyst Jonathan Heath in Mexico City, thank you very much indeed.